Welcome to the September 15th edition of Metals, Money, and Markets. I'm Rob Goodman with Mining Clips, and as always, to break down the data, the Mercenary Geologist, Mickey Fulp. Well, Mickey, the theme is U.S. markets at record highs, North Korea firing a missile, and the metals under pressure. Let's spin right into it. The sell-off continued, all stable, but the metals across off the board.
Yeah, the metals did not have a good week, basically down all week. Gold is fallen, testing support at 1320. It held yesterday, lost 2%. Silver lost 2.5% to 1755. Platinum lost almost 4% to 968, and palladium lost another 1.5% down to 915. Basically, in my opinion, the metals got way ahead of themselves, and we've had some selling pressure. And it's quite curious to me that even with North Korea and terrorist attack in London, the markets seem to look at all this geopolitical stuff as old news and have not reacted accordingly.
And meanwhile, copper, another bad week.
Well, copper just got way ahead of itself. When we talked about this last week, it was overbought by the specs, and then profit taking came in. So it lost another 3%, fell right through the $3 barrier and came down into the low 90s, and it's stabilized for the last 2 or 3 days at that level, closed the week at 293 for a 3% loss. But amid supply deficits and very strong demand, the futures curve shows very strong contango. I saw yesterday that the 3-month contract contango is at an 8-year high, so that's positive for copper market going forward.
And moving on to the energy markets, with Harvey a week past, we've got oil over 50, but comes back very strong here.
That it did. It closed at 49.83 for a 4.7% gain. A very nice rally. Some fundamental changes going on. Of course, Harvey is still disruptive, but productions come about 3/4 of the way back from the Eagle Ford, so that's good news. Refineries, still some offline. Gasoline inventories are going down. The oil inventories have gone up a bit. So the market's kind of rebalancing, if you will, at this point. What we really see is very strong demand growth this year. The EIA is now predicting 1.5% demand growth in 2017. That's probably more than normal for the world. So I'm fairly bullish on oil in this plus or minus $50 range. That doesn't mean it's not going to go back down into the mid 40s, but it seems to be pretty range bound over the last few months in the upper $40 range.
And meanwhile, uranium was off a tad bit here too.
Yeah, it lost quarter over the month. It's a bit curious what's going on in the uranium market, or maybe not curious, but certainly of interest. Since mid-June, the uranium market has been completely range-bound between $20.25 and $21. So once again, not a lot of interest in this market. We've got oversupply that still is being worked off, and we don't expect uranium to move up or down very much for the near future.
Heading over to the currency markets, the U.S. dollar had one of its better weeks, and as expected, the euro and loonie suffered against it.
Yeah, the dollar was up more than half a point. Euro was down a half a point. Loonie was down about a half a point. So looking at those numbers, the DXY at 91.85 for a 0.6% gain. Euro 119, and loonie is pushing back down toward 82 cents.
And finishing up with the markets, Led Zeppelin saying about it, the song remains the same. The Dow is on fire and the S&P at an all-time high closing.
Until the levee breaks, huh? U.S. markets have ignored all these geopolitical events As you said, Dow at an all-time high, S&P 500 all-time high, 22,268 for the Dow, 2.2% gain, 2,500 even for the S&P 500, 1.6% gain. And NASDAQ had a very good week too, up as all the tech stocks rallied, led by Apple. It closed only 12 points off its all-time high at 64.48.
And when will that levy break? Finishing up with the venture, a solid little gain here.
Yeah, we saw some upticks in the venture, closed at 780, up a percent. Increased volumes this week, but still historically low for this time of year. What I see, and this is very encouraging to me, and I'll know more after my jaunt up to Beaver Creek for Precious Metals Summit this week, is there's lots of dollars, lots of money getting itchy on the sidelines, appetites there for deal flow, as it was this time last year before the price of gold cratered. But we'll have a better idea of that risk appetite in a week when we talk.
Well, we'll look forward to that and keep our eye on North Korea, as McMasters has some pretty strong language here. So it could be a very interesting week. So, Mickey, have a great weekend. Appreciate the time, and we'll catch up with you next week.
Yeah, one last comment, Rob. I see this North Korea debacle as unresolvable, shy of war. And talk about the levy break. This could be the catalyst at some point in the future, let's say in the midterm, that sends these overbought U.S. markets tumbling down.